By refinancing a house loan, you are essentially replacing your existing mortgage with a new one that comes with different terms than the one you already have. To obtain a lower interest rate or to reduce their monthly payment in some other way, people frequently refinance their mortgage. Mortgage refinance rates. See how mortgage refinance rates are trending today. How to find the best mortgage refinance rates. If you want to locate the best mortgage refinancing lenders for you, you should shop around and receive pre-approval for a mortgage from at least 2 or 3 different lenders. This will allow you to get the best rates possible on a refinance mortgage. Determine who can provide you with the best overall deal by comparing the various offers. Not only should you evaluate the interest rates of each organization, but you should also compare the annual percentage yield, APR. The annual percentage rate, APR, is calculated by adding the interest rate to the costs of various things, such as discount points and fees. This number is greater than the interest rate, and it is a more true picture of the amount that you will actually pay on your mortgage each year. 30-year mortgage refinance rates. When compared to a mortgage with a shorter duration, a mortgage with a fixed rate for 30 years will have a higher interest rate. The interest rates on mortgages have climbed dramatically across the board over the course of the past couple of years, and the rates on mortgage refinances have not been an exception. Rates are anticipated to make a downward trend this year, despite the fact that they have been raised in recent weeks as a result of inflation that has been higher than anticipated. In February, the average interest rate for a 30-year refinance was approximately 6.82%, according to statistics provided by Zillow. This represents a 50 basis point increase from the average for the prior month. Up until this point in the month, the rates on refinances have been somewhat unpredictable, with some instances reaching above 7% and then rapidly falling back down again. When compared to buy rates, refinance rates are often a little bit higher. Refinancing at this time is generally not a good option because interest rates are still rather high even though they have decreased. In the event that you are having a significant amount of difficulty meeting your monthly payments, refinancing into a 30-year term could result in a reduction in your monthly payment. This is because the payments would be spread out over a longer length of time. On the other hand, this indicates that you will end up spending a great deal more on interest in the long run. 15-year mortgage refinance rates. The interest rates on 15-year mortgages are lower than those on 30-year fixed-rate mortgages since the periods of 15-year mortgages are shorter. The new mortgage that you take out will be paid off over a period of 15 years if you refinance into a 15-year fixed rate. The interest rate that you receive will be lower than the rate that you would receive with a longer term. Nevertheless, the amount that you pay each month will be higher because you will be paying down the same mortgage balance in half the time. In February, 15-year refinance rates averaged around 6.04%, up 24 basis points from the month before. Like 30-year rates, 15-year refinance rates have been fairly volatile in March. Mortgage refinance rate trends. Average refinance mortgage rates trended down toward the end of 2023 and started the year relatively low. But they've increased recently in response to hotter-than-expected inflation. Inflation should slow this year, but it may a bit longer than initially expected. As inflation eases, mortgage rates are expected to go down in 2024 as a result. Average cost of a mortgage refinance. As with your initial mortgage, you'll pay closing costs when you get a refinance mortgage. According to the Federal Reserve, refinance closing costs are usually 3% to 6% of your remaining mortgage principal. This comes to $3,000 to $6,000 for every $100,000 you borrow. A report by financial tech company Closing Corp states that the average refinance closing costs in 2021 were $2,375 without taxes. Your closing costs partly depend on where you live and the value of your home. You could pay less in closing costs in Indiana, where home values and property taxes are fairly low, than in Connecticut, where values and taxes are relatively high. Closing costs also depend on your lender. Many lenders charge certain lender fees, such as application or underwriting fees, which can add to your closing costs. When you consider the cost to refinance your mortgage, consider whether the financial trade-off will be worth it. You may cut your monthly payments by hundreds of dollars or lock in a significantly lower rate that will save you thousands in the long run. In these cases, you may decide you're comfortable paying closing costs. Pros and cons of refinancing a home. Pros. Lower your monthly payment. If you get a lower rate or refinance into a longer term, your monthly payment will likely go down. Lower your overall interest costs. A lower interest rate or shorter term can cut down on the amount you'll pay in interest over the life of the loan. Tap into your home's equity. Cash out refinancing allows you to take money out of your home and use it for things like debt consolidation or home improvements. Get a stable monthly payment. If you currently have an adjustable rate mortgage, refinancing into a fixed rate mortgage will keep your monthly mortgage payment predictable for the life of the loan. Cons. You'll have to pay closing costs. The cost to get a refinance could add up to several $1,000s that you'll have to pay at closing. If you move too soon, you won't break even. If you don't keep the new mortgage long enough, you may end up spending more on closing costs than you'll save by refinancing. You could end up paying more in interest. Getting a longer term can save you money on a monthly basis, but over the life of the loan you'll have higher interest costs. Your monthly payments could go up. If you refinance into a shorter term, you'll have the benefit of paying off your mortgage faster, but you'll take on a higher monthly payment to do so.